Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, July 21st, and we got quite a bit. Actually, most economic news releases this week is scheduled for today, so we got quite a bit to go over. Tomorrow will be a light day because there is no economic news releases, but tomorrow will be extremely important because we had the debt. Find out if the debt ceiling was passed from Congress. That seems to be kind of working things till 11th hour, unfortunately. So, meanwhile, creating a lot of anxiety in the markets. So let's go ahead and take a look here at the economic news releases. We'll start off with jobless claims. Last week we had 408,000, and they were kind of expecting it to drop a little bit more, but it actually went upwards. So not such good news. They're kind of again they keep talking about how we're gonna have a job improvement, but we're not quite yet seeing it yet. Also, we got the leading indicators. We had 0.8% the previous month, and 0.3% was the estimate. We figured it would slow down, and well, it did. Came in at where expectations came. So again, not a good sign because that's kind of showing you where the future is lying with the economy, if it's going to be contracting or if it's going to be, growing. And it's right now it's not showing more contraction. Uh, so let's go ahead and take a look here at the Philly Fed. They didn't have such good readings last month, so let's take a look see what they have this month. As we said, the previous month it was negative 7.7, and we figured it was still going to be negative at negative 2.7. But we actually had pretty good news. It actually came in at 3.2, so not great news, but better than a contraction right there. So we actually had some positive results on the Philly Fed. So some decent news right there. FHA, FH, FA, excuse me, home prices. Being a lender, get used to saying FHA all the time. They came out with their report, and the previous month came up. Home prices came up 0.2%, but they actually went up to 4.4%. So good for homeowners. That prices showed that they went up a little bit. And so we'll go ahead to the headline news here. And of course, right now the stock market's up. Actually, it's pretty big for the Dow. Dow is up over 100 so far this morning. And a lot of it some of it is due to the several financial companies from Morgan Stanley, American Express, a couple other companies were reporting better earnings than previously thought. So that was pretty good news. And then, but what's really kind of pushing it right now on the stock market is what they're looking at. Is the Greece payout looks like to be maybe set with their conference that they're currently having, the second time that they met this past month, and they're kind of figuring that. The plan that they're putting in place may have some type of selective default, that they'll accept a selective default on Greece's payments and their debt. So they're trying to ease some of that out. So that way Spain and Italy don't, it doesn't go across the board and they start paying higher rates and start defaulting on their debt. So they're trying to alleviate that as much as possible. Now, the big one for here, I mean, not here, but next one will be reports that continued showing slowdown for Chinese economy. They showed another contraction, another report, HSBC flash manufacturing report came out about the Chinese economy showing another signs of more contraction in their economy, which obviously doesn't bode well here in the U.S. As we do a lot of trade with China. But here's what I was trying to get to was Congress is still kind of sorting out the debt ceiling. So again, creating a lot of anxiety in the markets. And as we mentioned, if they don't get something passed, it could be the first time we've actually defaulted, which create a lot of havoc regards to higher costs for everybody, from mortgages to any type of borrowing and interest, as that is debt that they would require consumers. So the consumers will be paying higher money, as well as the government will be paying more money. So obviously, to pay the higher debt, the yields that they'll be paying to acquire more bonds, of course, they're going to raise more taxes. So something we don't obviously want. We don't like the higher debt sum because we don't like to see ourselves going to higher debt, but yet we don't want to be paying more in the long term either. So I guess you got to pick your poison there. So let's go ahead and take a look at where the bond market and where interests are moving. Actually, it started off lower this morning. We had a little bit of as you saw, a little bit of a drop here. And then right now we open up, look like we kind of semi-closed the gap. We are up and down, getting that star effect right there. And we're kind of a sideways pattern, but rates are probably a little bit worse than they were yesterday's reportings, as we dropped a little bit. And on top of it, we had as I mentioned, we started off much lower than where we left off yesterday. So interest rates will be a little bit worse today than they were yesterday. All right, folks, you guys have a wonderful day. And again, if you're in California looking for a mortgage, if you're looking to refinance, or perhaps you're out home buying, looking to buy a home, and I could be of any service, please feel free to stop by my other website, CaliforniaMortgageTips.com, and you'll find a lot of great information in there. And I'd love to be able to help you out with your mortgage needs. You have a wonderful day, and catch you tomorrow.